What's up, y'all? It's your boy Matt Trades, and today I'm going to be showing you guys how to use your gaps and imbalances as your TPs. These spots in the market are excellent for setting your TPs at, which TP stands for take profit, and which is also your exits out of the market. So these areas can be used as a confluence, and they act also like a magnet for where price will pull back to. But I'm going to show you guys a couple of examples in the chart, and let's get it. All right, don't mind the glare or whatever that's on this screen with the webcam or whatever. I'm just here to give you value. But all right, so we're going to be talking about how gaps are like magnets in the market and can be used for you to take profit, or those general areas are take profit zones. And when you see this, you're going to be like, man, I need to be doing this. In my opinion, though, I feel like you should be doing this more on stocks that aren't the most traded. Like everybody wants to trade Tesla, Amazon, all those. They're good stocks, but back testing and seeing how these move on stocks that are like low key. Like look at those low key stocks if you can. Look at those low key stocks and don't just think you need to trade Amazon because everybody else in the world is trading Amazon. Like, it's better to sometimes go a different route. So Kinder Morgan is another company that is in I believe they're in the energy space or something like that, like energies or something like that. Yeah, energy space. But look at this. So I seen this double bottom right here, and I seen that first I seen this big gigantic push to the downside, and overall Kinder Morgan is in a up trend, right? So the only thing I'm looking for is buy opportunities. And when I seen this gap, I'm like, okay, this gap in gaps and imbalances areas are literally your take profit zones that you can target. And also with the strategy, you're going to only want to use it with the trend, the path to least resistance. Okay. So now that I showed you that, I think I showed this on the previous video, but I'm gonna just show you guys another pair that does the same thing. Now I'm going to show you guys another stock that does the same thing, or just show you different examples of these gaps and imbalances that you can use for your take profit zones. Over here on January 27th, Amazon had a gap in the market on the Monday, right? Now, what do we know about Amazon? I'm calling this stock Amazon. Sorry, y'all, it's late. Microsoft. What do we know about Microsoft? Well, what do we know about Microsoft and Amazon? Those stocks like to keep what? Trending upwards. So what do you want to do to make your life easier? Find the best buying opportunities. Now, this video is just about gaps and imbalances, right? So right here, let me get rid of that line. So right here, okay, price is at 425 and it gapped, right? First confluence, 425, whole number. It's one of those places where price likes to hesitate or reverse off of. Really reversals for this 125 since it is a whole number at 125. Since it is a quarter point or whatever at 425, this is the areas that it likes to reverse off of. If we're doing like a little bit of like some quarters theories or whatever, 425 will be included in one of those. But look at the gap we have. Now, I said that you want to trade gaps with the trend, gaps and imbalances with a trend. And if you see gaps and imbalances together, okay, that's a strong major and confluence that price might go back up and fill that area. So now, look, what would you do? You would just find your entry, whatever your interest is. This is just me showing you how price moves back into those areas to fill. See how it fills back in? Look for those gaps and try to capitalize them. I only like to do them on buys, but whatever you do, this is how I'm just teaching it. Okay. So here's a good one. All right. Now look at this gap. So let's look at the daily. Let me go farther out. So I was already looking at this. So if we go back in 2022, this thing has been going all the way up, a strong bullish market. Now, why would you, as a trader, want to sell this, right? Now, if I drop back down to the 15-minute where it is now currently after Thursday, so I'll be waiting for Friday at 8:30 for this market to open up.
if I wanted to trade NVIDIA, first off, go to the hourly. Guess what I see? I see a double bottom right here. NVIDIA, double bottom right there. Straight out the gate. I see a double bottom. Right? And what do we know about M's and W's? Well, W's are for buy opportunities, right? So I would be looking for buy opportunities into at least max the 140 area. I'll be looking for buys on NVIDIA into the 140 area. That's what I would buy. A strike price. I like in the money contracts for stocks, or not stock, well, stocks, but for options. I now trade options with stocks that are available through options. I would buy a strike price somewhere that I can, at least, this is not a entry video. It's just showing you how to look for these trades. And one of my best strategies is finding gaps in the market. Let's look at here. So we have 830 right here. What do you have? A gap. Okay. And what has NVIDIA been in? A strong uptrend. So why are we not looking for buy opportunities? And this is just showing you the gaps. Obviously, other things go into factors even besides gaps and stuff. But this is just me telling you, you need to be looking for these gaps. You need to be looking for the gaps, and you need to be looking for the imbalances. So like on this Dominion Energy trade that I was able to ride all the pause. So this Dominion Energy trade that I was able to take all the way up into 55.80, it was a small gap. That still counts. I don't care how small the gap is. I'm looking at every little piece of thing because the market isn't just random. That gap, it didn't want you to see that, for one. And especially if it's a gap that small, like, okay, you got to be like, okay, the market, it don't want me to see that, but I see it. So I used all my confluence. I had an imbalance, gap, a double bottom right here on the 53 level, which is a reversal level because it's a whole number. And then I took it to all the gaps and imbalances. Gaps or imbalances. Like here could have been my take profit. This area is my take profit. And this little small gap area is also my take profit area. And like I said, like you guys like that are, maybe if you're new to trading, you think like, oh, like trading is like super complicated. It's really not complicated. Like if you overcomplicate it, that's when it gets hard. That's when trading becomes a difficult thing to do. So here's where Netflix is at. So Netflix, what do we know about Netflix as well? Netflix is a strong bullish market always. This stock has been proven that it wants to keep going up, at least for now. But Netflix is really probably going to keep going up because Netflix is trying to get their hands into all kinds of streaming, other streaming things, and even sports now that you can watch sports stuff on Netflix when they host it. So they're really trying to get their hands in everything. Now, this is the thing that I would not do. If I know that Netflix is a strong, bullish market, why would I want to sell? Right? The trend is our friend. If I see this gap, I'm not selling. Okay. I'm not doing this. I'm not selling. I'm not selling into here because that would be not very smart thing to do. Now, people can get lucky and start selling it, or some people might sell it because maybe that's what their strategy and what they look for as well. I'm not telling you like selling is bad, but I'm telling you like selling right here, like this stock could easily just say boom and keep going up because you're trying to trade the gap right here. But you're going on the path of so much resistance rather than waiting for this gap to be filled, right? And then trying to buy it back up. That's what I would do on this Netflix trade right here. If I was looking at Netflix and I was a person who wanted to see if I wanted to get to Netflix, I would be waiting for maybe this filled area because it is a big giant area to fill. And if it's going on its way up, then I would suspect that, okay, I would draw my Fibonacci out. If you're not familiar with Fibonacci, maybe I'll make a Fibonacci video. But I really don't use my Fibonacci a lot. But if you're confused, Google's your best friend. Google is your best friend to learn what Fibonacci is. If I don't make a video on what Fibonacci is, but I really don't use my Fibonacci anymore. Sometimes, but you don't really need it. But boom, I would do this, and I would wait till price came back to my 0.786 or to my 0.886 area, and then I would buy to the top. Right. that's how I would trade this, right? And if it demolishes, like 1.1 is my stop losses or areas a little bit. So if it demolishes 1.1, 1.2, then you can start looking at sells. Then I would say, there's a gap down here that might get filled. Who knows? I don't know if Netflix wants to drop all the way down to 700 area, but it's possible. Anything's possible with the market. You just have to read and react. But I don't want to make this video too long. I hope that made sense. I feel like I was kind of talking a little fast, but I'm trying to get back in the swing of making content. But that is how you would look at gaps and imbalances in the market and trade it with the trend. Write this down. If you have a notebook, write this down. The trend is your friend. Gaps and imbalances in the market with other confluences as well that I have in my arsenal to make me make a decision in the stock market. But it's your boy Matt Trades signing out. Peace.